All right, folks, Happy New Year and welcome back to the channel. Today is Friday, January 3rd, 2025, and this is the monthly investing adventure. Yesterday was actually the first trading day of the new year, but I didn't get a chance to make a video, so today's the day and it's close enough. So let's take a look at where we ended for December 2024 and talk a little bit about what my plan is for 2025 with the portfolio, and then we'll go ahead and make our buys. So right now, the portfolio is sitting at almost $7,200. That has some gains from today, and it also has some contribution that went in on the first of the month, which was $305. If we were to take the 305 out of this and the gains from today, we ended December around 68.50 thereabouts. So let's go ahead and take a look at the performance of the portfolio, and then I'll go into some of my thinking for 2025, and then we'll go and make our buys. So the portfolio is actually doing pretty good, even though the month of December itself was pretty bad. I think that when I looked at the returns for the entire year, it was something like 15.5%. Granted, this is lower than the S&P 500, but it's to be expected with the allocation to bonds and some other things that were going on. But not a bad return for a diversified portfolio, and we'll keep on going with that. So what's the big change for 2025? Well, the big change is to increase the monthly contribution from $275 to $305 a month. So the idea here is that we're going to try to increase our contribution every year. Hopefully, if you're following along, you're getting a raise and you're contributing a bit more than you did the previous year. 305 is about 10% more than the 275. And you may not be getting that as a raise, but whatever you're getting, you should adjust accordingly. But the reason that I'm adjusting by 10% is just to show you that you should get into the habit of regularly increasing your contribution. Aside from that, there's no change to the allocation. So let's go ahead and take a look at it and talk a little bit about it and my thinking on it. This is a good allocation, I think, for most folks, even though it tilts a little bit more conservative than, say, a 100% stock market portfolio. But it's also going to make it more likely that you're going to stick with it. You're going to get great returns with 100% stocks allocation. Problem is that you're also going to have a lot of volatility. And it's always when you have the volatilities that people will not stick with their plan. So that's the reason that I picked this. And I think it's a good portfolio even when you're accumulating. And it's just generally a good all-around portfolio. So what is the portfolio philosophy just at a high level? It's a 70% stock portfolio, 20% bond, and then 10% to commodities. But diving into it, we take our 70% stocks and we divide it evenly in half, with half of that going to large cap growth, so 35% of that 70, and we're using the NASDAQ 100 as that large cap growth. And then the other half, 35%, is going to small cap value. And this is represented by the Advantis ETF, AVUV. For the bond allocation, we're using a government intermediate bond ETF called GOVT. 20% goes to that. And then lastly, we have 10% to gold, which is our commodity allocation. This is probably the maximum you want to do in your own portfolio, but it's been shown that if you have anywhere from 5 to 10%, it's going to help smooth the ride and help you when you rebalance. So that's the allocation. The year-to-date return for this allocation, it's only been one day. So, it's not counting today. But yesterday, the portfolio did go down because the market opened with a down day yesterday. But it went back up today. So if we were to look at this together, it's probably flat, but a one-day year-to-date return doesn't mean very much. The portfolio allocation itself, when you backtest this, basically says that you should expect about a 9.4% annualized return over the long run. We've been doing this for a little bit now, and we're seeing 18.2 annualized return over this time frame because it's been a pretty good ride. So just to set your expectations on where we began with this, it's almost 2 years ago. So it was on March of 2023. So come March of 2025, it will be exactly 2 years. And the last 2 years have been really good for stocks. There's just no doubt about that. So, after a down year in 2022, we had the recovery in 2023 and it continued in 2024. What's going to happen this year? We don't know. But the plan is to stick with this allocation, increase our monthly contribution by about 10% to bring it to 305, and just continue with our plan. In terms of the long-term balance, it's tracking a little bit above the forecasted return, but you can see that it's slowly dipping back, and I expect that over the long run, it's going to revert to the mean. That's just a concept that you may see these fluctuations either up or down, but over the long term, you should expect what the forecast says you should get for this allocation. But always good to check and see where you are, but try to ignore the day-to-day, month-to-month allocation. All right, let's jump into the monthly buys itself. So we added in the 305. There was some cash left. So what this basically says is that we're going to be buying into everything, some more than others, because as we buy into the allocation here, we're going to rebalance. So we're going to buy about 226 of the small cap value, $21 of the large cap growth, $45 of government bonds, and then the other $13 into gold. So let's go ahead and make our buys. We are going to be using the trading dashboard, which I like to use, even though it's intended to be, for active traders. I use it because the interface just works better, right? So here is the monthly investing adventure portfolio. And first up, we're going to make our buys of $21 to the large cap growth, followed by 226 of the small cap value. So for large cap growth, that's QQQ. I'm going to click on that. I'm going to buy, and we'll buy dollars, 21 at the market, preview it, and getting it placed. So we're doing market orders because we don't really care about execution price for what we're doing. It's not a big deal if you're paying the higher end of the spread. There's just not that much money to worry about it. Next up is small cap value, and we are going to buy 226 of that in dollars. So I'll buy dollars, 226 at the market, get that previewed, and get that placed. All right, let me go and double check my buys. 45 to government bonds and about 13 to gold. So 45 to bonds, that's the GOVT, Intermediate Treasury ETF. And we're going to buy $45 of that. So buy, market, dollars, 45. Get that previewed and get this order placed. All right. Last but not least, we're going to buy whatever is left over to gold. And when you buy gold on the platform, you're going to get a little warning that it's a commodity. It may not be appropriate for everybody, but we're going to ignore that. So let me do my math. I'm going to try to get exact to the cent as best I can because I don't want to have leftover. So we are buying 1334. There is always going to be a little bit left over as the computer figure out what you can buy for that based on the system that Fidelity runs here. So I'm going to go ahead and buy dollar market 1334. And the reason that you don't buy exactly 1334, even though you get close, is that Fidelity allows you to buy fractional shares up to 3 decimal point. So depending on the current price and all of that, you're going to end up close, but not not exact. Sometimes exact, but most times not. We're going to preview. We're going to get that warning about being a commodity. But we already have our permissions entered in the system, so it's all good. So now we've executed, and you can see that we started with $305.06 in cash, and we spent $305.01. So there's 5 cents left that's going to be sitting in cash for the next time. That's pretty much it for the monthly investing adventure for January 2025. I just want to really introduce the concept of making sure that every new year, as you get your raise, that you should increase your contribution. It's a best practice. And then the other one is that no matter what happens in the world, we're just going to have a plan and stick with it. That's the most important thing. So in any case, thank you for checking in, and enjoy the ride, and I'll see you on next month's adventure. See you later.